Hey everyone, it is Evan here from the Trade Risk on Tuesday, March 5th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to kick things off here with our market technicals dashboard. We can see that we're starting to get a little bit of red creeping in here. Today's numbers, for instance, very flat, sideways, choppy day, closing mixed across the major indices, right near flat, basically right across the board. And our 5-day change numbers actually starting to move into the red here, indicating that there has been a little bit of some stagnation. That upside momentum that we've just seen relentlessly for all of this year, frankly, is starting to wane just a little bit. There's no real damage yet, but some sideways chop, which we'll talk about when we look at the charts. And we can see here, even against some of the shorter term moving averages here, so the 10 SMA, the Dow, and the Russell are now below the 10-period simple moving average. And, we are still kind of grappling mostly above the 200 SMA, except for the Russell. When we look down here at some of the 5-day numbers now, we have utilities and energy at the top of the pack, as well as biotech. And on the downside, we have transports, builders, industrials, all kind of on the bottom end here, negative on the 5-day numbers. When we look across at some of the other major markets, we have energy though, natural gas, oil, and the dollar all kind of holding up in the top relative strength pile. Meanwhile, we have silver, gold, and the volatility index VIX, which is still seeing some unwind there. So kind of a mixed bag, an interesting bag when we look at the 5-day slice. But let's take a look now at the charts. Let's take a look at what's going on here, and we can see this is the S&P 500. This is a weekly time frame, so each bar represents 1 week worth of trading. We can see we are down slightly so far this week, minus 0.35%, and it's already been a fairly wide range week. We had a fairly eventful Monday kickoff to the week, which we'll talk about in just a moment. But when we look here at just the weekly structure, we note that last week, while we did close positive, we did have a kind of slowdown, a little bit of indecision there, a little bit of a tail on the bottom end, and it was coming in right at that 2,800 level, which all eyes seem to be on for the S&P 500, as this is where the market has failed and has been below since October of 2018. So we haven't been able to rally above this point and get some consecutive closes in almost 5-6 months at this point, and we're going to see now if this fourth time up here is the charm to break through. Right now we're seeing that it is not, or that there's some stagnation here. 2793 is where we closed here on the day on Tuesday, so we are back below that 2800 number, but still well within that realm of noise, kind of just waiting to see if this resistance area is going to hold here for this week. So weekly chart, all else the same here, mostly sideways, a little bit wider range, but we're still moving sideways here. The MACD still trying to actually push higher here, so there's some positive divergence or some positive momentum that's still on this weekly bigger picture time frame, which is constructive for the bulls. But we're going to need to see again if we can come to grips with this 2800 level and close above it. That's going to be the what we should be paying attention to into Friday, into the close of this week. Now, if we go down to a daily chart of the S&P 500, let's look at yesterday's candle here, and you can see that we really had a fairly eventful Monday where we started the session off with a nice gap, enthusiastic sort of gap higher. We tried to push up just briefly a little bit off of the open, and that was pretty much it. The market failed up around just under 282 in the SPY ETF, and then proceeded to roll over, and at one point was down about 1.25%, and in fact bearishly engulfing the past almost 6 days worth of trading in the process, when we were trading down here around 277. Now, the constructive piece is we did not close down there, right? We did not get that bearish engulfing bar on heavy volume. We did get a bounce off of the lows. We saw some buyers step in, and we saw a negative close yesterday and well off of the lows of the session. Today, of course, now is just an inside day, very, very small range given what we did yesterday. And I really think now for you short-term active traders, yesterday's low and high is a good reference point to pay attention to going forward. It's approximately 282 on the upside and 277 on the downside. It's a 5-point range, and I think that's the range we should be paying attention to for the rest of this week. Will the market get some follow-through to what the sellers tried to kind of lay out here Monday morning, or is that just the shakeout and this trend continues like we've seen for the past several months? That's going to be, what we want to be paying attention to, looking for clues for in the next coming days or so. So for me, 277 to 282, high volume came in yesterday. Let's watch those extremes and let's see if we can get some type of breakout here in the coming days. Today's inside session is certainly one that will keep us on our toes to watch how this ends up resolving itself. Now, if we look at the IWM here still settling much closer to the lows. And in fact, if we look at a weekly chart of the IWM, you can see we are in fact trading just under last week's lows still. So we are trading, effectively at them. I think last week was 156.12. We closed at 156.08. So we're slightly below last week's lows. The IWM has been the leading market for the past many months. So this is interesting. If we continue to see weakness here and we see a loss of, would not only be last week's lows, but the prior week's lows as well, we would start breaking to new kind of 3-week lows here. Again, not the end of the world. Let's take a look here at how much we've rallied over the past 9 or so weeks. We've enjoyed a 27% rally from the lows in December, a pullback of 3, 5, 7, 10, even 15% would not be the end of the world. Does not mean we have to, just suddenly run for the hills again, but it is, depending on how active you are in the markets, those types of percentages can mean a lot. So, let's, continue to watch how this weekly candle forms and finishes. Do we actually get a close at the lows here, or can we get a pickup and support of this kind of upper level range here north of 155? If we go to the Qs next, you can see a little more resilient actually than the other markets. So we get a little bit of flip-flopping here because, as you know, if you followed the past couple of videos, we've been talking about sort of the stagnation, a little bit of underperformance or sluggish behavior out of the Qs recently, and now we're kind of seeing that flip on its head where the Qs are actually starting to get a little bit of bid here. It's minor at this point, but notice we are green on the week, and we are much closer to, say, last week's highs than we are last week's lows. Take a look at the IWM. We're closing at or under last week's lows. If we take a look at the Qs, we are closing just about at last week's highs. So a little bit of kind of split, split down the middle there for the market. Again, we'll want to see how this closes out the week. We've seen volume diminishing here, but MACD continues to make new highs. So we got kind of mixed signals right across the board. All in all, I think when we kind of sum up the markets here, really hasn't been any technical damage to speak of. We did have a loud Monday. There's no follow through today. We're still trading at this significant 2,800 level in the S&P 500. Let's see how this continues to play out for the week. Let's see if the bulls can hold on to this uptrend that's been in place for the past couple of months, and we'll take it sort of one day at a time. So that, I think, kind of covers the major market environment. Let's take a look at some of the major other assets. We'll go to TLT next, which I think is interesting because here, notice we had the very loud week last week where we did start to get that breakdown in TLT. We started to get this move below the January lows, making new kind of year-to-date lows on the year for TLT. But notice this week, we've rebounded or attempted to rebound and recoup some of that damage. And notice we're kind of rallying right back to this January pivot here. So for me, this, is suddenly looking like this could be some type of false breakdown, shakeout, whatever you'd like to label it, if we can get some more consecutive closes and really kind of punch through this 120 level. If we reclaim this sharply, then I think it's going to be, a pretty good save here by the bulls, and perhaps, this was the nice shakeout on heavy volume that, will allow us to kind of float higher. We're not there yet. We're going to want to see more follow through higher. We're going to want to see a close of the week above 120, but that's what I'd be paying attention to right now. It's it's kind of back testing this old support that it broke down from, and let's see how it reacts going forward. If we go to USO next, you can see this is, has kind of caught its breath, moving sideways here. We're kind of talking about this old range that it was in for a while, looking to see if it was going to break down back into it. It so far is held. It got a nice little kind of retest of the upper end of it around 1160, 1155, and we've got a couple of inside days brewing here. So USO still trying to hold bid, mostly sideways, fairly choppy right now, but bulls arguably still in control in the short term. If we go to natural gas next, natural gas is kind of sleeping, kind of a sleeper to the upside here. It broke back above 2450 or so. That was generally the level that we were paying attention to in the last few videos. It is above that zone. It is grinding higher. There's not a lot of momentum or urgency behind this trend to the upside, but the gains are there. It is making progress kind of one day at a time, putting in these 1% days, which is starting to, add up and repair us above some of these year-to-date lows and prior inflection points. So for natural gas, short-term trend is higher, bulls in control. Let's pay attention to 2450. Let's see if it can hold for the week ahead. Finally, if we go to metals, we got GLD, which really hasn't done a whole lot. It tried to sell off a little bit earlier in the week, and in fact yesterday and today it did probe lower. It did kind of turn around a bit today, but it is still fairly damaged goods here. It did break down last week from this trend line, a bit stretched to the downside, so a little reversion here probably makes some sense, but generally speaking, the last kind of technical point to pay attention to was this breakdown here. So the benefit of the doubt goes to the sellers in my mind in the very short term for GLD. We'll have to see a higher low get put in, more structure, more sideways action if that opinion is going to change. And for silver, it's kind of the same thing. We had that breakdown last week, below trend line, below horizontal support. We're getting basically a flat week so far. Nice little reversal here on Tuesday, but needs to get more, more support and repair in here before we can really feel confident, at least in my mind, jumping back into either of these metals. So that is it. That is what I have. I think that's everything from my notes. Taking a look here, battle at 2800. That's what we're seeing right now, and we'll see if we get that follow through. That's it from me. Thanks so much, as always, for tuning in every Tuesday and Friday for market recaps. And don't forget to check out yesterday's video, long-term market technicals. We kind of put aside all of this short-term, noisy, daily chart price action. We take a look at the monthly time frame, really big perspectives. We covered that yesterday. I'll link it up here in the YouTube video, but check it out if you haven't already. Thanks so much, and talk to you in the next video update.